Japan's central bank holds steady on rates. But will the yen feel the heat? The Bank of Japan, BoJ, has once again decided to keep its key interest rate unchanged at 0.5%, a move that has left many wondering about the future of the Japanese yen. But here's where it gets interesting. Despite the hold, BoJ Governor Kazuo Ueda hinted at a potential rate hike down the line, contingent on economic and price improvements. This nuanced stance has sparked a flurry of reactions in the currency markets, with the yen experiencing modest losses against the US dollar, trading near 153.00 at the time of writing. The BoJ's delicate balancing act. During the press conference, Governor Ueda shed light on the BoJ's cautious approach, emphasizing the need to monitor the impact of trade policies on financial markets, the Japanese economy, and prices. This is the part most people miss. The BoJ is walking a tightrope between supporting economic recovery and managing inflation expectations. While Japan's economy is showing signs of moderate recovery, there are still areas of weakness that require careful attention. Controversial dissent and future rate hike timing. And this is where it gets controversial. Two BoJ board members, Takata and Tamura, dissented from the majority decision, advocating for a more aggressive rate hike to 0.75%. Their argument, that the Japanese economy has shifted away from deflation, and the central bank should aim for a more neutral policy stance. But the majority disagreed, opting for a more gradual approach. Governor Ueda also clarified that there's no preset timeline for the next rate hike, leaving markets guessing. Market reaction and currency implications. The US dollar to Japanese yen pair has been on a roller coaster, rebounding sharply to challenge the 153.00 mark before retracing slightly. This volatility reflects the market's uncertainty about the BoJ's next move. Higher interest rates typically strengthen a currency, but the yen's weakness against the dollar suggests investors are skeptical about the BoJ's ability to tighten policy aggressively. Is the BoJ falling behind the curve? Or is this a strategic pause? We'd love to hear your thoughts in the comments. Economic outlook and risks. The BoJ's quarterly outlook report highlights several risks, including the impact of FX volatility on prices and the possibility of wages and prices deviating upward from baseline projections. The global economic outlook remains uncertain, with trade policy and international commodity prices adding to the complexity. Japan's GDP and inflation forecasts have seen minor adjustments, but the overall tone is one of cautious optimism. What's next for the yen? As we look ahead, the yen's performance will likely hinge on the BoJ's ability to navigate these challenges. A dovish stance could send the yen tumbling, while any hints of a rate hike might provide some support. Will the BoJ surprise markets with a December rate hike, or will it continue to play it safe? Share your predictions below. Key takeaways. The BoJ maintains its key interest rate at 0.5%, with a cautious outlook on future hikes. Dissenting voices within the BoJ highlight differing views on monetary policy. The yen remains under pressure against the dollar, reflecting market uncertainty. Global economic risks and trade policies will play a crucial role in shaping the BoJ's decisions. Thought-provoking question. Given the current economic landscape, do you think the BoJ's cautious approach is justified? Or should it take bolder action to combat inflation and support the yen? Let us know in the comments.